This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the last week of March, end of the month, end of the quarter, 2022. We knew this was going to be a volatile week with April options expiring, the April gold contract going off the board, all the end of quarter shenanigans, of course, ending up with the latest jobs report. The week began on Monday with news of peace talks out of Ukraine. That was all it took to smash gold backward. Did some damage on the short-term chart, of course, and that's how it usually goes. All part of what we discussed on Monday, March 28th. All right, and finally, just your updated charts, daily charts. You can see what we're looking for. Big old red candle today in COMEX gold. Of course, half of this red candle coming, like I said, after the COMEX close, where we've fallen from 1940 down to 1920. 1920, key level of support. But notice we dipped 2 weeks ago all the way down to 1895. So, if you really want a dip to buy, and I do, this is what I'd be looking for over the next couple of days. With everything else going on, the contract going off the board, the shenanigans, the end of the quarter window dressing, the LBMA options pricing at the end of the quarter, all that kind of stuff. Why wouldn't we hope for even a dip down to 1880? Okay, that was as low as we got on the invasion day back on February the 24th. It's also those peaks back there in the middle of November. Why wouldn't we intraday at least come down and tap that level? Price did go down and tap those levels early Tuesday, but then we got a reversal and price headed back higher for both COMEX gold and COMEX silver. Most notably, the prices of the shares were moving higher too, the mining shares, as evidenced by the big ETF, the GDX. Gold came down to the levels it bottomed at 2 weeks earlier, but the GDX bottomed a full dollar higher. That's an interesting sign of sentiment in the sector, and that's all part of what we discussed back on Tuesday. Notice from 2 weeks ago today, on that low when gold tapped 1900 2 weeks ago, the GDX has almost an identical candle to today, opening below 36 and closing back up near 37 that day. Well, what happened today? With price basically the same, if not a little lower for gold, the GDX opened below 37 but closed above 38. That is, I guess, what we'll call relative strength versus the metal itself. That's a pretty good sign of retail and institutional interest in the shares, which is also a pretty good sign of higher metal prices to come. And in fact, the metals did extend that rally on Wednesday the 30th as the April gold contract went off the board. Prices actually rose. Silver, though, was running into an area of pretty steep resistance, an area that would serve as resistance the rest of the week. And it's an area we'll watch as we go into April, that's for sure. All part of what we discussed Wednesday, March the 30th. And finally to silver. Again, same thing. Consolidating. The key level here in its own little pennant after finding support yesterday at the 50-day is clearly 25.50. We got as high as 25.26 today and then just drifted back. Let's watch that closely. There's the downtrend line. You can clearly see that. And you can see that by Friday, those two are going to intersect at 25.50. Crude goes higher. Copper goes higher. Shares look like they want to go higher. Gold looks like it wants to go higher. Can certainly see silver then too, getting above 25.50 and above 26 and making a move back up toward 27 sometime over the next 2 to 3 weeks before the May silver shenanigans begin. So there you go. Thursday, March 31st brought the end of the month, but also the end of the first quarter of 2022. Some significant charts getting painted. Not only was that a very solid monthly high for COMEX gold, that's a new all-time quarterly high for COMEX gold as well. For the long-term chartists and generalists out there, that's a big sign for higher prices to come. So we took a look at that monthly chart, saw some very interesting features, and it left us pretty optimistic about where we go from here in the months to come. First one is your COMEX gold monthly chart. Again, Not the highest monthly close of all time. Those are back in August and September of 2022, up around 1962 or something like that. This is, though, a new high quarterly close, which is even more important. Previous high quarterly close was around 1891, the end of December 2020, so we bested that by about $50. You can see on the chart I added a few chart features for you that I think are rather compelling, right? You got this massive cup and handle on here, but also a little itty bitty cup on the breakout. All of this leaves me very optimistic, especially with that central bank curtain getting pulled back later this year, when the realization begins to set in that the Fed's in a stagflationary hole and they've got to fight recession more than inflation, and they start cutting again. When the curtain gets pulled back like it did in 2009 through 2011, look how gold went straight up. When the curtain gets pulled back, as it did from late 18 through 2020, look how gold went straight up. When the curtain gets pulled back again, it's going to go straight up again through 2100 to at least 2300. When? Later this year, early next, as that all plays out. And on Friday, April the 1st, the latest U.S. jobs report came out. And that was all the news it took for the bond bears to kick in again, driving interest rates significantly higher and inverting the yield curve. This is a certain sign of recession. Big problems for the Fed in the months ahead. All of this making your physical gold more valuable than ever. But of course, that's not reflected in price. No, the trading machines see the higher interest rates and they throw out their digital gold as fast as they can, with gold going out on the week down, probably $25 or $30. But we'll see where we go from here. Again, the long-term charts look great, as we discussed yesterday. But in the short term, not much you can do. Once the algos lay into you, they're going to run their course, and that's what we saw here on Friday. Thanks again for listening to the TF Metals Report podcast highlights. Again, a daily podcast is just part of what you receive as a member of TF Metals Report. Come by the site and check it out. It's all just $15 a month. I think everybody there feels it's money well spent. Hope to see you there, and hope to see you again next Friday for your latest edition of the TF Metals Report podcast highlights.